Hi guys. This is the part three of the video I'm making on everything you need to understand about XMC, smart money concepts. This topic is very important because um, you can't, if you don't understand what this topic is all about, the inducement, it will be difficult for you to actually understand SMC in total. So the topic for today is inducement explanation. A lot of people got it wrong, identifying valid inducement. And as you see here, I will make a clear example, explanation, at least to my best knowledge, for anybody to be able to comprehend what inducement really is on the chart. So let's dive into it. So the question I ask here is, what make an inducement? Because a lot of people pick an inducement, they don't really understand what characteristics that make up an inducement that make it to be valid, because it's not all pullback or all random chart that you can call an inducement. So the first thing that make up an inducement is valid pullback before or after break of structure. I will explain that. Then the second thing is recent valid pullback after break of structure. So valid pullback is the keyword. It must be valid. If you don't understand what I mean by valid pullback, you can go and watch the part one, because I also explained that the part one is very crucial. So valid pullback is the keyword here. Before or after break of structure. Then the second one is recent valid pullback. Okay, sorry, recent valid pullback after break of structure. So let me explain what this actually means. So in a situation, this is an uptrend. If you are in an uptrend, this example will be basically only uptrend. I don't know if I still have time, I will do, but it's the inverse. So it's still the same process. So the key thing is for you to get the process right. So look at this. In this situation, as I said, valid pullback before or after break of structure. So let's assume that, let's say this is our break of structure. Now, as you see, it means that this is our low that the market created. So it means that this low must be protected. This low must be protected. This is our trading range low. So now, if we want to trace this movement to the up, you see that immediately we had a break of structure here. This is the last valid pullback that the market did before or before. This is for the before. So now this is going to be our inducement immediately the market break this structure. So we are expecting a situation that the market must come back to take out this level before we can think of buying this trade or enter this trade. So this serve as our last valid pullback. But in a situation that the market refuse to come and create another one, it means that this level will be our recent valid pullback after break of structure. So that's the difference. This is the last valid pullback before the market comes back here, which serve as our inducement. But this is the recent valid pullback after break of structure, because break of structure has already happened here. So this is the recent pullback. So this is where the inducements rest on. So in any situation, you must wait for this level to be taken out. It might be a sweep of this level, it might be a candle close. We are not talking about the POIs, the entry model. It's only identifying the trap, the inducement. So it might be whichever way, but this level must be taken out before you can think of any situation, maybe you want to buy or you want to sell. So this is going to be our inducement according to this diagram. So this is where the trap is. If you are trying to buy here, it's a trap. You don't buy here, it's a trap. So you wait for this level to be taken out before you can think of making any decision. So, and as you see, immediately market take out that low, this inducement, market do what? Market create another movement like this, then break structure for us here. So, as I said, break of structure happens here. Where is our recent valid pullback? Immediately we had this break of structure. This is our recent valid pullback before break of structure. So the same thing applicable to this level. Market refused to take out this low, and market did what? Market created another push to the upside. So it means that now we have the recent valid pullback after break of structure. So this is where we have the pullback before after the break of structure has happened. You don't need to, this is not a break of structure. Why? I will explain that in the next video, because you refuse to take out inducements. Assuming that it comes down and take out this inducement, then we can classify this as break of structure. That's where a lot of people get trapped and get it wrong. So in this situation, this is not a valid break of structure, because break of structure must also have, it also has its own characteristics what make it valid. So in order to avoid this trap, then you have to be sure that your break of structure take out inducement before it close above the structure. So in this situation now, this is going to be our valid pullback. This is a minor, because if you look at it like this is the major pullback. The pullback inside is inside this level. You can see this pullback. So, but in the other video, I'll get there and explain the minor and the major pullback. All you need is inducement. So you don't need to worry about that. When you get to that level, you will understand and how to use both of the pullback effectively. But look at this last pullback, the recent pullback after market did what? Break the structure here. This is the break of structure, and see the last pullback that the market did. So that's what enable us to have. After market did that, then it came back to take out this inducement. So this is where the liquidity rests on, and the process continue. So this is where we now have our break of structure. So this is just the basic thing about inducements. You don't need to worry yourself. I'll still explain it on the real chart. So if you have a situation that the market is doing this like this, you don't need to worry. Just make sure that you are following through, because this is not break of structure, this is not break of structure. It's just impulse correction. Then the last correction serve as what? As your inducement. So the moment market take out this level like this, then it means that this high, when market break this high, you have a break of structure. So then you wait for the market to do this. This might not be on the chart, might not be as clear as this, but once you understand your valid pullback, it will be easy for you to spot immediately you even open your chart. So in this case now, we have what? We have our break of structure here. So where is our inducement? This is our last pullback before the market break the structure. Then we are expecting the market to come down. This can be so noisy like this, but this is where the market is coming to. And this low will be protected because market is going up. So that's when you will see the situation that the market will do. Then it will break the structure again here. So This is all you need to understand about inducement. So let me explain this on the real chart for you. Let me clear this. So, so on the real chart, look at this. The momentum is bullish like this. Is bullish. So what do we notice here? Market break this structure. Why do we have a break of structure here? Look at this. Market was giving us something like this, like this, like this, then push up. So it means that we must have a what? A last break of structure, which is, I think I didn't trace it right. So something like this, push down, then market was going up, push down, then did this, push down, then continue. This where we have valid break of structure. That's where I trade. So, and you see market actually, this is our last low before the break of structure happens. And if you look at it closely, let me expand it. If you look at this closely, you will see that this is what the market created and this is our last low. And systematically, you see that this pullback came back from this level and break up. So we break this structure to the up. So it means that we have a break of structure here. So on the way to break the structure, what does the market created? Let's start from here to trace it. Impulse correction, impulse correction. So now, when the market broke this structure, this is our what? Our last pullback. This level. There is a valid pullback here. Yes, this level. So, but we are expecting the pullback to come back. This serves as our what? As our last pullback before the break of structure happen. Then when the break of structure happen, market did what? Refused to come here. Then it did what? It created another pullback from here. So this now serves as our recent pullback. I don't want this chart to be too long. So this serves as our recent pullback. After break of structure, then this is our recent pullback. And market take out this. This is not a break of structure. It's just a pullback. So these are recent value pullback. And you see how nicely the market came back for it. Like this. Then break this structure. So as you see, market came back for it, then we'll do what? Break the structure. So it makes this level to be valid break of structure. So what are we going to look out for? This is going to be our low. The market must protect. So if we are to trace it, you can see that as we are going, we have a small pullback here, then market push up. So it means that this will serve as our last pullback before break of structure. And you see how sweet the market came back for it and push up. Now, this level is supposed to be our break of structure. But you can see that as the market is trying to break the structure here, no valid pullback. So that's a sign that we the liquidity is resting below here. Since there is no valid pullback, assuming that we have a situation like this and market create another value pullback and push up, then this level will be our break of structure. But since market refuse to create another pullback, then it means that this level will be used as the what? As an inducement. And you see how nicely the market came back for it and did what? And push up. So that's how the process will continue. So if you're trying to buy here, you will be trapped because of what? Because you become the smart money trap. This is liquidity resting here. So if you are also trying to buy here, maybe you said this is an order block, you you want to buy here, you see how you'll be fucked up. So because what? Liquidity is resting below here. So that's the trap that you have to understand. So in this case, you see that when market is about to break this structure, it created something like this, then push down, then push up. So let me retrace this. This is the valid pullback is not correct. So you see that market, this is not a valid pullback. So it means that market only push up one leg, push back, then. So if this market wants to then, it means that market must come below this level and take out this inducement before it continue to the upside. So that's just it for value and for inducement. That's all you know. You need to know about inducement. And for the bearish scenario, if you have something like this is going to be your inducement. So you wait for market to take it out, then continuation. You see that this level now is what is the impulse. This is where you pick your inducement from. Then this level is the correction. This is where you pick your this what this is the movement that is going to take out your inducement. Then you see that this level is another impulse. This is where you pick your inducement from. So if I'm to make it clear on chart, if I'm to make it clear on chart, this is what it look like. This level is the impulse. Then this level is the correction that will come for the inducement. So you don't pick your inducement from the correction, you pick it from the impulse. Look at this. This is the impulse. This level is, sorry, this level is the impulse. Sorry. Oh, my network. Okay, I think I will need to continue this video since my network is fluctuating. So and we are actually done with this video. So that's it for the inducement, guys.